Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, Hawaii. It is Tuesday, the 20th day of September, and this is the daily report for gold. We have a nice showing this morning with gold currently trading up about $24 to $25 higher, 1803 in the low 1803 area. As you can see, our current tick on the board. In terms of the high, we have seen it as high over this period of time of about 1810. That's this tick right in here. And of course, this video is following a buy recommendation that we issued last night to enter the market from the long side. We'll go through that as well as my outlook for the rest of the week, all here on today's daily report. Traders' continued concern about European debt crisis issues, as well as the belief that the Federal Reserve will step in and in attempts to bolster the U.S. economy will add to the current stimulus program. Standard & Poor's yesterday cut Italy's credit rating, and that was one of the components that began this particular rally. Of course, we issued a buy signal, and this is the chart that I sent out with it. And let me spend a moment and go through that with you, traders. And what I saw was this. As the market started trading lower, I noticed that we had some real resistance just by following this resistance channel line down. I really drew two of them. One here, which covers these tops, and of course, this one from the end of this body and this top. And as I take that down, you'll see that as we looked at the market, I could see that there was some real resistance forming right in this area. Now, as you know, I have also been looking at this correction as a possibility of a triangle or a pennant correction. So when we take a look at how this market reacted, and traders realize this, the easiest way to define if a market is going up or going down is by looking at the succession of lows and highs found within the market. What I mean is this, the easiest way to define a market in an uptrend is to look at the lows, and if you see as we go through the peaks and valleys, a series of higher lows, it tells you typically that the market is moving up, and the same thing, you would get higher highs, as you can see here. The same is true as a market will go down. As a market goes down, it will have a lower low, and then a lower high, then a lower low, and then a lower high, and so forth. Now, when we hit this low at 1760, that was about a week ago, call it 714, 715, right in this area, we hit our first low. The market rallied back, and when it came back down, as you can see right here, we got our first higher low. So that was a real clear-cut indication that, in fact, we had a genuine possibility of a bottom forming. As this market came down then, when we take a look at the activity, it did seem to find support at our lower channel line also. Let me get that back in. At this lower channel line. And you can see we had a couple of points in which it breached that, but for the most part, it stayed very true to form. So I felt we had very strong support right in this area. We had very good resistance up till then in this area. And it caused me to consider issuing the buy signal. Now, when the market came down, it made this low, and this was yesterday, right at about 1780. It formed a hammer. I put one of my charts up onto the new subscriber chart page to let everyone know that we were looking at this as a potential move in the market. And when I saw this market break out, that was a point when I realized that we had some upside potential in the marketplace itself, and that was this particular candle right in here. So what I did is I issued a buy signal which simply said you can buy half at the market or wait till 1800. I'm going to make the assumption that you bought half at the market, that would be 92, and then you bought the other half at 1780, would give you an average price of about 1786. Stops, we recommended at 1755. This being 60 down here, I wanted to have our stop below this low. So that's what the basic move was in terms of the recommendation I made yesterday. And we did re-enter the market long. Market is trading $20 or so higher than our buy-in price. But what we really have to concern ourselves with right now is we still have this upper band of resistance, as you can see, and we're butt up against it again. So how is the market going to react? Because at some point it's either got to break hard up or down in terms of where price structure is going to go. But when I take a look at the fundamental data driving the market, which is new stimulus by the Federal Reserve and renewed European debt concerns, my sentiment is we will probably see a break to the upside. That's my belief anyways. Traders, we are currently looking at a 360-minute. This is the continuous contract of COMEX Gold. And when we look at the dailies, we're still in solid red. Realize on a Henkin chart, it is an average chart. It will lag behind. But as you can see on the 360, which still gives us some pretty good defined channels as well as trends, you can see that our MACD has crossed back over, and in terms of our Henkin candles, we are back into the red. So my contention or belief that we are probably witnessing a pennant correction is still holding true. In other words, as I said yesterday, should this market break below, hard below these points here, my belief is that we're not really looking at a triangle correction as much as the possibility of a simple ABC correction. But so far, it has shown us in terms of the data and the price activity in this market that it's most likely that we are going to witness a much more shallow correction, and that correction is going to pan itself out in terms of the structure as an triangle or a pennant correction. As you can see here, I've called this an ascending bottom and flat top. It's Elliott Wave's terminology, but you don't really have this triangle. You do have it with these particular lows, and you can see how these highs, you can see how these highs continually have been gotten lower. So what we really need to see on this particular rally for it to indicate that we've gotten that breakout is to break above really this last top right in here, and that would give us a much clearer indication that in fact this market is headed higher. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.